In this video, I'm going to show you a key opportunity that has just arisen in the FX market. I'm going to identify for you a currency pair that really has a tremendous outlook. And in the video ahead, I'm going to outline the reasons for this trade outlook and identify what would invalidate the reasons for it. I hope you find this update useful.
There is a potentially very interesting setup that's about to take place in the dollar index, and I'm just going to run through that with you. Now, one pattern that's very helpful in trading is a seasonal pattern. Now, what are seasonal patterns, you might ask? Well, they're essentially technical signals which often have a fundamental background. And seasonal patterns sort of work year in, year out across various markets for a number of reasons. It could be due to weather patterns, harvest periods, maybe timing of interest payments, regular fund inflows, tax payments, investor sentiment. And seasonality is based on that historical data, but obviously not every year is the same, so use with investor discretion. But the pattern I want to share with you is a very common pattern that's been played out over the last 50 years or so, and it's to do with the dollar index. Now, what happens if you just see here's a look at the dollar index over the course of a year, the inflows and outflows, and you can see that the dollar index tends to fall in December. Now, the reason for this is that large US companies move money to daughter companies to save taxes. This is a taxation region. Also, if you notice in January, the dollar index tends to rise as money comes back into the US. So you can see this taxation reason, dollar index tends to drop in December, tends to rise in January. So that is a pattern that can be very helpful for trading. You can see here, looking at the end of November through to end of December, you can just see that the dollar has been losing value consistently over the years. And you can see, last time with the financial crisis, 2008, heavy dollar falls. And you can see here that there's been 22 years of losses versus only 11 years of gains in the last 33 years. And the maximum loss was minus 6.43%. So from a seasonal perspective, you can see that the dollar index tends to be very weak at this time of year. Just to illustrate the point, and you can see conversely, the dollar index tends to be very strong in January. And that's a pretty helpful little pattern to be seeing. Now, the reason that's very helpful for this year is particularly because the bearish factors that we've got influencing the dollar are pretty bearish. Most analysts are bearish the US dollar. It's on the reflation trade that as life gets back to normal. There's also huge, large quantitative easing levels. They devalue the US dollar. We've got a Biden presidency. He's going to be walking back from President Trump's American first protectionist policies. All of this is weakness for the US dollar. Quantitative easing weakens a country's currency. Now, the bullish factors influencing the dollar that we always have to be aware of is that there are risk-off tones on COVID-19 lockdowns. The dollar has been trading as a risk-off currency. So if risk-off things come into the market, so the vaccines don't work or it mutates or there's some worse situation with COVID-19, then we expect the dollar to strengthen. And also we have to look what the Fed Reserve are doing on interest rates. They're meeting at the end of December. So in the near term, if they were bullish or changed their forward guidance or started talking about raising interest rates, that would change the outlook for the dollar, and we could easily see some dollar strength. But at the moment, you can see that those patterns for dollar weakness are very, very well historically backed up, and we do have bearish reasons for the US dollar at the moment. So where might there be potential opportunities to sell this? Just take a look here. We'll look at the dollar index. Now, here is the dollar index. Look, the dollar index is just breaking through this massive trend line from 2011. So touches here, 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 3, 4 touches. It's a valid trend line. If we break and close below this on the weekly, that's opening up technical shorts. So one potential area traders could sell at market as long as this candle closes below that candle, or look for a retest of that trend line, and stops could be run relatively tight, just around that 94-95 level, looking for a drop, sharp drop lower around to that 88 handle. So there's a potential great area for shorting the dollar index. Now, something else I want to show you. Another good expression of dollar weakness could be New Zealand US dollar longs. Now, the Reserve Bank of New Zealand has been pushing back from moving to negative rates. Now, a couple of things. Do check out my blog, and on my blog you'll see I've spoken about this in some detail. Also notice the 10-year government yield bonds. So if you just look at the yield bonds here, you can see the 10-year government bonds have been boosting higher, considerably higher. You can see here expectations are being dialed back of interest rate repayment, of interest rates going negative for the RBNZ rather. So this is bullish for the New Zealand dollar. So when you put that into perspective, you can see that there are some fundamental bullish reasons for New Zealand dollar strength. We've seen the fundamentals reasons for US dollar weakness, and now look at the seasonals. Over the last sort of 20 years, look how much the New Zealand US dollar pair has gained. So you can see that 75% trades long New Zealand US dollar have won over the last 20 years, and the bias is very strongly to the upside. Obviously, look, you can see here in December, from the 29th of November through to the 30th of December, the New Zealand US dollar has gained almost, across the board with very small losses over those years. So, the maximum loss was minus 2.51%, and the maximum gain was 10.29%. So the odds are fairly, are really in your favor here with this potential currency trade. So New Zealand US dollar longs potentially look good. Where might you enter? Well, let's just take a look at the New Zealand US dollar currency pair. There's a couple of good places here. Price breaking through this overhead resistance, so potentially traders could look for a couple of options. Option one would be a break and retest of this level. So as long as we break above that on the weekly chart, then look for a retest here moving higher. Option two would be a break of this mother candle, break and close above, and you just expect higher prices, so potentially you could buy at market. Where would you put your stops? Stops could be run just below the weekly here or that weekly there. They should be fairly safe places for stops given the strong fundamental bias. Obviously, the things that would change this outlook would be if we saw strong risk-off sentiment come into the market, COVID-19 vaccine news that took the market by surprise, or some other unexpected event. Obviously, we have to trade using insight and understanding of the current market conditions. But current market conditions do favor New Zealand US dollar longs at the places that I have outlined. Now, if you'd like some more information, do follow me on Twitter. You can follow me at LinkedIn. Do go to my blog at blog.hycmlab.com. You can follow me there and contact me direct for some great programs. I've set up some great programs to help traders take their trading to the next level. I can meet with you, find out where you're at with your trading, and best point you in the right direction. So I hope you find that helpful. If you found that helpful, like this video, share it, give it a thumbs up, and much appreciated. Thank you all now. Goodbye.